Good afternoon and welcome back to the Smart Wealth channel. I am your host, Troy Lerche, bringing you this week in wealth. I wanted to make sure everybody saw Jeff's new video come out on Friday. Please check it out, and if you like it, click the like button, and we want you to subscribe to the Smart Wealth channel so you don't miss any of our future content. As we always do, we like to start with the CAPE indicator, which was up to 39.17 from last week's 38.58. We're still in bull territory, and now 4 of the 4 indicators are green, so we had a switch last week. In U.S. markets, we had U.S. equity indexes finished up for the week, with the NASDAQ outperforming the broader S&P 500 and the narrowly focused Dow Jones Industrial Average. We had the Dow Jones finishing up the week with a 1% gain, and the NASDAQ rallied 2.8. We had large caps finished up 1.5, mid caps finished up 3.4, and small cap led the pack by surging 5.1%. In international markets, major international markets were also positive for the week. We had Canada's TSX gained 1.5, United Kingdom's FTSE 100 rose 0.8%, France's CAC 40 and Germany's DAX added 0.8% and 0.3 respectively. We had China's Shanghai Composite finished up 2.8%. Japan's Nikkei ended the week up 2.3%. And for all the international markets, developed international markets finished the week up 1.6%, while emerging markets rallied to 4.2%. With commodities, we had precious metals rose as inflationary economic reports were released this week. Gold rose 2%. Silver added 4.1%, and crude oil retraced all of last week's decline by surging 10.6%. Industrial metal copper finished up the week 4.7%. In U.S. economic news, we had the median price of new homes reached a record high last month as buyers appear to be unfazed by the price tags on newly built homes. The Census Bureau reported new home sales increased 1% to an annual rate of 708,000 in July. This report exceeded expectations, as economists had forecasted an annual sales rate of 700,000. Sales varied by region, with the Northeast and Midwest seeing declines of more than 20% compared to last month, while the West posted a gain of 14%, and the South had a 1.3% uptick. The number of new homes for sale at the end of July increased 5.5% from the month prior, and were up 26% from the same time last year. So the inventory in July equated to a 6.2 month supply, representing the highest level of supply in over a year. So that could be telling about the housing supply and the housing strength. Sales of existing homes rose as the inventory of the homes for sale grew, giving relief to buyers who had been bidding up prices to excessive levels. The National Association of Realtors reported existing home sales rose 2% to a seasonally adjusted 5.99 million in July. Economists had expected home sales to come in at 5.83 million. The median sales price of existing homes finished at 359,900, up 17.8% from the same time last year. Sales rose in 3 of the 4 regions nationally, with the Northeast being the only region not to see an increase. The Midwest saw largest gain in June with a 3.8% uptick, followed by the West 3.3% and the South 1.2%. Spending among the nation's consumers slowed in July, but remained positive as inflation and Delta variant of the coronavirus weighed in on spending. The government reported consumer spending rose 0.3% last month, matching economists' estimates. Analysts noted that big potential obstacle in the economy is inflation tied to widespread shortages of labor and materials, and Fed liquidity. The personal consumption expenditures index, rumored to be the Fed's preferred inflation measure, climbed 4.2% in July, the highest level in 30 years. Federal Reserve Chairman Jerome Powell, in his closely watched speech in Jackson Hole, Wyoming, stated he believed that the central bank can begin to taper, quote unquote, or slow its bond purchases. The Fed is currently purchasing 80 billion of treasuries and 40 billion of mortgage-backed securities each month to put downward pressure on long-term interest rates and boost demand in the economy. And finally, the University of Michigan reported a recent plunge in its consumer sentiment index. Contrary to what you might think might logically expect, this is actually a positive for the stock market. Analyst Mark Holbert notes that American consumer is a fairly reliable contrarian stock market indicator and calculated the data in the chart below. More often than not, large declines in consumer confidence has been followed by above average stock market returns. As Warren Buffett says, it is wise for investors to be, quote, fearful when others are greedy and greedy when others are fearful. Well, that's all for today. I hope you have a great week. Take care, stay safe, and we'll talk to you soon.